Hello and welcome to QuanX News. I am Prasann Koli, here to bring you the latest stories about India's financial world. This podcast is sponsored by QuinTalk Solutions, your partner in smart tech solutions. Don't forget, QuanX News is available on all platforms. Let's get started. It's the first trading day of July, and the Nifty has kicked off the new month on a strong note. After closing June with a gain of 3.58%, the bulls are back in action with growing confidence. June's positive finish was marked by strong rollover data at 79.53%, which was not only higher than May's rollover rate but also aligned with long-term averages. Even more telling was the elevated rollover cost of RC 63.30, indicating traders are willing to pay a premium to carry long positions, showing cautious optimism in the market. As we enter the July series, the tone remains bullish. There has already been a significant 9.1% increase in open interest, jumping from 1.50 crore in June to 1.63 crore now. This rise in open interest, accompanied by an uptick in prices, clearly points to aggressive long buildup. While the broader momentum is strong, investors are keeping an eye on global events and sector rotations to steer their strategies wisely. Volatility has cooled off significantly. The India VIX, a key indicator of market fear, dropped more than 23% in June, falling from 1642 to 1259. While this drop in volatility brings comfort to bulls, traders remain alert to macro uncertainties and foreign institutional investor behavior, both of which could still impact short-term sentiment. Foreign institutional investors remained largely cautious throughout June. The long-short ratio hovered between 19 and 25% for most of the month. However, on the final day of the June series, the ratio jumped to 38%, a sign that foreign players may be slowly warming up to Indian equities. Even so, the ratio is still below the 45% mark that usually signals full-fledged bullish participation. In the options market, strong put writing at the 25,000 level has established it as a solid support zone. On the flip side, call writing has been aggressive around the 26,000 to 26,200 range, forming a key resistance band. If Nifty manages to break above 25,800 with volume, it could trigger short covering and take the index swiftly toward 26,300. The technical setup continues to favor the bulls. Nifty has broken out of a long consolidation phase and is forming a higher high, higher low structure. It's trading above both its 10-week and 20-week exponential moving averages, and the weekly RSI is holding above 60, further confirming the momentum. Previous resistance between 24,700 and 25,000 has now turned into a strong support base. This level is reinforced not only by price action but also by strong put writing and key moving averages. As long as the index stays above 24,700, the trend remains clearly in favor of the bulls. There's also a seasonal boost at play. Historical data shows that 9 out of the last 10 July series have ended in the green, making July the strongest month for average returns in the past decade. This seasonal tailwind could amplify momentum and carry Nifty toward uncharted highs. With strong rollover activity, reduced volatility, rising foreign interest, and a bullish technical setup, the buy-on-dip strategy continues to be favored by traders. The support zones now lie at 25,200, 25,000, and 24,700, while resistance is expected at 25,800, 26,000, and 26,200. If Nifty sustains above 25,800, a move towards 26,300 could be swift and powerful. That's all for today on QuanX News. We talked about market trends, small cap movements, FII selling pressure, and the rupee hitting a record low. Thanks to QuinTalk Solutions for sponsoring this podcast. Stay curious, stay informed, and see you next time.